Welcome to Talk Tickers. We're here to dive deep into earnings calls, pulling out the essential insights for experienced investors like you.
And today, it's all about Amazon's Q1 2025 earnings call. We'll break down the numbers and what's really driving the business.
Let's start with that bird's eye view then. What did the top line look like?
Pretty strong, actually. Revenue hit $155.7 billion. That's up 10% year over year, excluding currency effects.
Okay, 10%. And there was a currency headwind.
Yeah, about $1.4 billion. But even with that, solid growth.
And operating income. That often tells a different story.
It really does. It surged, actually. Came in at $18.4 billion.
Wow, $18.4 billion. That's a big jump.
Huge. It's a 20% increase year over year and significantly above their own guidance.
Shows good cost control, maybe? And cash flow.
Definitely points that way. And yes, free cash flow trailing 12 months is looking robust at $25.9 billion.
Okay, let's break it down geographically. North America.
North America revenue was $92.9 billion. That's up 8% year over year.
And international.
$33.5 billion there. Also up 8% year over year if you strip out the foreign exchange impact.
So consistent growth across those core retail regions. What about actual units sold?
Good question. Worldwide paid units grew by 8% as well. So yeah, consumers are still buying more items.
All right, moving to the big engines. AWS.
AWS continues to fire on all cylinders, $29.3 billion in revenue.
And the growth rate there?
Up 17% year over year. That puts it on an annualized run rate, believe it or not, over $117 billion.
Over $117 billion. Just incredible scale. And the other fast grower, advertising.
Yep, ads are really performing. $13.9 billion in revenue for the quarter.
Which is up.
Up 19% year over year. Very strong growth there.
And finally, the bottom line, net income.
Net income came in at $17.1 billion for the quarter.
And that included something extra, didn't it? An investment gain.
It did. There was a $3.3 billion pre-tax gain from their investment in Anthropic baked into that number.
Right, the AI company. Okay, so that's the snapshot. Let's dive deeper now, maybe starting with the stores business. What's driving engagement there?
Well, they called out a few things: selection, value, and crucially, shipping speed. Customers seem to be responding well.
Yeah, they're adding new brands.
Yeah, they mentioned Oura Rings, Michael Kors, The Ordinary.
Yeah.
Even a refined luxury assortment from Saks. So, broadening the appeal.
Trying to capture more wallet share, sounds like. And the value piece?
They highlighted saving customers over $500 million through global deal events. So price is still a major focus.
And behind the scenes, the logistics. You mentioned speed.
Exactly. They're continuing to refine that fulfillment network. Yeah. Things like regional hubs and a redesigned inbound system are leading to record delivery speeds for Prime members.
Which strengthens the Prime offering, obviously.
Absolutely. Makes that membership stickier.
Now, they did touch on potential tariffs. What was the commentary there? Any impact yet?
They said they haven't really seen demand soften because of it. Not yet, anyway.
But they are preparing, maybe stocking up.
There was some mention of potential inventory stocking, yeah. Proactive moves. But they also feel their broad selection and mix of sourcing gives them an edge.
Direct versus indirect from China, that dynamic.
Right. And interestingly, they noted everyday essentials grew more than twice as fast as the rest of the business.
Suggesting maybe some resilience if prices do rise.
Could be. People prioritize essentials, right?
Makes sense. Okay, shifting gears to Amazon ads. Almost 20% growth. What's the engine there?
It's really about their full funnel offerings. They can reach customers at every point in the buying journey.
And the reach is massive.
Huge. Over 275 million users just in the US. Plus, they're expanding where those ads appear.
Right, not just on Amazon.com.
Exactly. Prime Video, Twitch, IMDb, live sports, even Amazon Music and Wondery.
So leveraging all their properties.
And even external sites like Pinterest and BuzzFeed now. Plus, they're pushing things like secure clean rooms for data analysis, which advertisers value.
Okay, let's tackle AWS and AI. Cloud adoption still has momentum.
Definitely. They signed new deals with big names like Adobe, Uber, NASDAQ.
And the overall market opportunity is still vast.
That's the key point they made. Over 85% of global IT spend is still on premises. So the runway for cloud growth is, well, it's still massive.
And AI is layered on top of that now.
Absolutely. They're investing aggressively across the board. Mentioned over 1,000 internal AI applications being built.
Wow. And that includes things like Alexa.
Yeah, they talked about the next-gen Alexa Plus, being meaningfully smarter, able to actually take actions for you.
Interesting. And for developers, the AI building blocks.
That's a huge focus. They've got their custom Trainium 2 chip, offering better price performance for AI tasks.
Their own silicon.
Right. And then there's Amazon Bedrock. It's a managed service
Yeah.
giving access to all sorts of foundation models.
Like Anthropic's Claude 3.
Exactly. And Meta's Llama 3, Mistral AI models, their own Nova family. Lots of choice.
Giving developers flexibility.
Precisely. They also previewed Amazon Nova Act for action-oriented agents and launched a new coding agent within Amazon Q.
Amazon Q, the assistant for developers.
Yeah, making coding more efficient. And the result, their AWS AI business already has a multi-billion-dollar annual revenue run rate.
Multi-billion. And the growth.
Triple digits year over year. So it's scaling incredibly fast.
But it also relies on modernizing infrastructure, right?
That's a key point. You need that modern cloud base to really unlock AI's potential.
Okay, let's circle back to the financials and the outlook. There were some one-time hits to profit.
Yeah, small impacts on operating margins in North American International, about 90 basis points and 70 basis points, respectively.
Related to
Historical customer returns and pulling inventory forward ahead of those potential tariffs we discussed. Short-term stuff, really.
So the focus is more on the ongoing cost improvements.
Exactly. Fine-tuning the inbound network, expanding same-day delivery, adding automation. Those are the longer-term levers for efficiency.
And the guidance for Q2, top line.
They're guiding for net sales between $159 billion and $164 billion. Still strong growth implied there, despite a small expected FX headwind.
And operating income for Q2.
Guidance is $13 billion to $17.5 billion. That range includes the usual seasonal step-up in stock-based comp.
Right, that happens.
And also some additional costs for the Kuiper satellite launches.
Ah, Project Kuiper. So they're keeping an eye on the macro environment and tariffs.
Very much so. Taking actions, as they said, to protect customers and keep prices low.
Capital spending still high. Where's it going?
Yep. $24.3 billion cash CapEx in Q1. Mostly tech infrastructure, so AWS servers, custom silicon development.
And fulfillment.
And fulfillment and transportation network, yes. Building out capacity.
What about AWS margins? Can they keep going up?
They expect margins to fluctuate, based on investment levels and competitive pricing. They plan to bring on more capacity in the second half of the year.
Okay. And the backlog for AWS, that's a forward indicator.
Very strong. Reached $189 billion. That's up 20% year over year. Gives good visibility.
$189 billion backlog. Wow. And are big companies still moving to the cloud?
Yeah, they noted a resurgence in enterprise migrations after a period of maybe cost optimization during the pandemic.
People tightening belts.
Right. Now, it seems companies are moving forward again and often linking those migrations directly to new AI initiatives.
So cloud migration and AI are going hand in hand now?
Increasingly, yes. Though they did caution those big enterprise deals can have long, sometimes lumpy sales cycles.
Understandable. Okay, let's shift to our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on this call. You first.
All right. So Amazon's going deep on custom AI silicon, right? Trainium 2. The demand for AI compute is just off the charts.
Okay.
So maybe consider a long position in a company that specializes in advanced semiconductor packaging. The really complex stuff needed for these high-performance AI chips.
The idea being,
if Amazon's custom silicon really takes off, maybe even displacing some traditional GPUs in their cloud for certain tasks, the companies enabling that through advanced packaging could see huge demand. It's a niche play on Amazon's AI infrastructure build-out.
Interesting. Kind of a picks and shovels play on their custom silicon efforts. Outrageous, but plausible. I like it. My turn.
Go for it.
Okay, sticking with Amazon's core business. They highlighted the growth in everyday essentials, right? And they're pushing further into grocery, even beyond Whole Foods and Amazon Fresh.
Yeah, that part is growing fast.
So the contrarian, maybe outrageous idea, a short position in a traditional logistics company, specifically one that's heavily reliant on moving non-essential retail goods for, say, smaller retailers who haven't really cracked online delivery.
Shorting the logistics providers not working with Amazon effectively.
Exactly.
Yeah.
The thinking is, as Amazon gets even more efficient at delivering everyday stuff, they could really squeeze the volume and margins for logistics firms serving that potentially shrinking, less essential, less digital part of the retail market. People might be too focused on Amazon's tech to see the disruption in traditional logistics for non-essentials.
That's definitely contrarian. Focusing on the potential losers from Amazon's efficiency gains in basic goods delivery. Plausible, if a bit dark.
Okay, that wraps up our deep dive into Amazon's Q1 2025 earnings call. We've hit the key results, the strategic drivers.
Tours, ads, AWS, AI, the financials, and a couple of speculative ideas to chew on.
And just to reiterate, this is purely for informational purposes.
Yeah.
It's absolutely not financial advice. Always, always do your own homework.
Definitely. We'd love to hear what caught your attention from this call, though. What stood out most to you?
Yeah, join the conversation online, share your thoughts. We're always keen to hear different perspectives.